and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture and journey towards financial freedom, financial products, financial well-being, so you, like me, can reach your goals sometime in the future. Now let's get into the latest video. Now this video is about my self-invested, shall we say, ISA review for October 2023. Okay, now it's not to boast or brag or say look at me, but it's to show people if I can build a sizable portfolio, you can too if you take some steps, appropriate actions and think long term. So what are the aims of the portfolio, let's just say? Well, annual return growth of 10%. For 2023, we're looking for dividends of £2,400 and we're looking for a year-end valuation of £94,000. So how has the portfolio done in the month? Well, we've somewhat struggled. At the start of the month, it was worth £81,988. Profit year to date of over 6%. End of the month, we're now worth £78,756. A loss in the month of £3,232. And a profit year to date of 2%. So obviously some kind of contributing factors, but it just goes to show you'll have good months, you will have bad months. Now during the month we've made contributions, £526.14. Year to date for the tax year, £5,162.81. And our platform providers charge us monthly fees of £12.52, which is about average. It's based upon a percentage of the portfolio value. So where geographically are we based? Well, in the UK and Europe, 65.84%. In USA and Americas, 20.14%, and in Asia and emerging markets, 14.02%. For the month, though, we have received, shall we say, 3 decent dividends. Total dividends during the month, £214.44. Year to date, £2,226.69. So better than expected. And our shares gives an average yield of 6.3%, which has been somewhat, shall we say, uplifted this month because of some depressing share prices, hence the reason why the yields have gone up. So where do we get the dividends? Lindsell Train UK Equity Fund gave us £11.02, which is obviously reinvested in accumulation in them shares. Aviva, the insurance company, gave us £169.27, reinvested back into the company, gave us 41 new shares. And Legal & General Technology Fund gave us £34.15, again reinvested automatically in the accumulation price of those shares. So a collection, shall we say, but well above our targets for this year to date. Let's look at some of the holdings within the portfolio. So first of all, let's do our shares. Now these are my own personal opinions. The company, shall we say, I'm prepared to hold for the next 3 to 5 years. See no reason why we're going to sell any shares, shall we say, but they were bought for a specific reason. So at the moment we own 10 shares. We have increased that in the month, 5 in profit, 5 in loss. Total share value of £39,150 makes up nearly 50%, of which 40% of that is in the FTSE and 10% is in the FTSE 250. Okay. Now, largest holdings. Legal & General, the insurance company, we own 3,957 shares. £8,400, nearly 11% of our portfolio, but it has given a very nice yield of around about 8-9%, but it has struggled during the recent times, but we can just switch off. Great company, very cash rich. Our next holding is Lloyds Banking Group, 19,189 shares, £7,500, nearly 10% of our portfolio. Did have some decent results in the month, but I struggled because the banking sector affected other companies. But hopefully it will give us a very nice dividend on the next quarter results in February. But shall we say, has struggled during the month. Our next holding is Aviva, 1,774 shares, increased for the monthly dividends, £7,000, 8% of our portfolio. But again, just like Legal & General, giving a very nice yield of around 8%, just switch off, does what it says in the tin, very cash rich. Away from the banks, we own Card Factory, the retailer, 3,738 shares. Now we did buy an extra £500 in the month, so say I take advantage of recent results and trading statements. £3,600, 4% of our portfolio is under some kind of restriction for dividends, but it is making it very profitable and it is reducing debts. So hopefully next few years dividends will be recovered. Special dividends will obviously be back in place also. And then another share we've increased during the month is HSBC. Again, we topped under £500, essentially away from UK banks, but 490 shares, £2,900, 3% of our portfolio. Did have very good quarterly results, so it has increased its dividends, and it will be paying a special dividend at the start of 2024. Another company that's done good in the month is Sainsbury's, the retailer. 871 shares, £2,200, 3% of our portfolio. Has had some very good half-year results. Will be above expectations. Okay, but the dividends be reached or stay the same. 3.9p as an interim will be paid in December. And a share that has struggled in the month is Barclays due to the results. Down 6% on the day, 1,588 shares, £2,100, 2.65% of our portfolio, but now it's giving a very nice yield of around about 7 to 8%. Our next holding is a brand new one we've topped up on the month. Phoenix Group, the life insurance and the pension provider. Okay, has made some great strides being bought other companies. Okay, 421 shares. We put 2,000 in. It's now worth £910, but it is giving a very nice yield of 9% when we bought the share. Now giving a yield of 10% because of recent drop, but does what it says on the tin. But it is on a buying spree. Our next holding that's really struggled during the month is NatWest. The markets didn't react to the results very good. They plummeted during the day. We own 957 shares, £1,700, 2.2% of our portfolio, because of obviously affected by the results. There is a reduced debt margins, increased debts. The market did not like results one bit. And then finally, shall we say, AJ Bell, the platform provider, 629 shares, £600, 2% of our portfolio. It's very cash rich, is growing customers, is growing asset management, but it has been affected by a pricing structure, let's just say, mainly brought on by St James's Place, but obviously other investment managers are being affected by the proposals going forwards. So a collection of shares, shall we say, mainly based, shall we say, financial services, what we know, big banks, big insurance companies. So although the banks have struggled during the month, some of the results have been good, some have been bad, shall we say, but it will hopefully give us some very nice dividends, let's just say, start of next year. Remember, if you like the videos, smash the like button, subscribe to this channel. These are my only personal opinions. Now let's dive into what funds we hold within the portfolio. If you look at the following chart, an overview of where our funds are. Now we did own 12 funds, we have streamed that to 9. We've now got 2 in profit, and thanks to what's happened this month, we've got 7 in loss. But it makes up 50% of our portfolio, let's just say nearly £40,000. Now our largest holding is a passive ventures tracker fund. Nearly £20,000, 25% of our portfolio, and we did put in £3,000 in the month from some of the smaller funds accumulation. We can just switch off. Very low fees of about 0.3%, but it was done for diversification, and it's normally given a yield or annual return, let's just say, between 8 and 9% over the past numerous years. Our next holding, shall we say, is a legal and general technology fund. Okay, £9,400, 12% of our portfolio, has had a very good run lately. Again, it was done to diversification against the big tech players. We own a China fund, £2,600, 3.4% of our portfolio, has struggled during the last 12 months, but ultimately a long-term buy. And then one holding we've been increasing lately is a Fidelity World Index, £2,000, 2.55% of our portfolio, and we did put in another £600 in a month from cash and other funds, but it was done for diversification. So to say, a global player, we can just switch off, and the fees are 0.12%. We own a mid-cap fund, £600, 2% of our portfolio. We own 2 emerging market funds, £1,600, 2%, and £1,200, 1.5%. We may simplify moving forwards. And we own a second mid-cap fund of £1,000, 1%. And then our smallest fund struggled, shall we say, it's a Russia fund. We did put £500 in. It was in profit of over 20% at £600 plus. Obviously being affected by the Russia-Ukraine conflict ever since, and it's been struggled around about that amount for the past, shall we say, 18 months till the conflict started. But thankfully it makes up a tiny percentage, 0.32% of our portfolio. So a collection of, shall we say, funds. We have tried to streamline them, and moving forwards, when some of, shall we say, the emerging market funds come back in profit, or the mid-cap funds come back in profit, we will simplify them and put them into our, shall we say, technology fund or a passive venture or the Fidelity World Index. So we will have some kind of just simple ETFs moving forwards. Okay, but so not the greatest of the month, but the FTSE was down 3% in the month at least. The S&P 500 was down 3% in the month. So it just goes to show you'll have good months, you will have bad months. But we've seen that, shall we say, some kind of chance to restructure our portfolio and simplify our portfolio moving forwards. So we are still making a profit, 2% for the year to date. Nowhere near our expectations, but our dividends have been very good, shall we say. But it's the idea is it's not a get rich quick scheme. Think long term. You will have good months and bad months, but it just goes to show if I can build a sizable portfolio, let's say £80,000, you can too. If you take the steps, you take the action, and you get some kind of plan in place. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.